Welcome back, Money Minds, to yet another edition of Market Briefs newsletter by the Minority Mindset. Today is September 10th, and here's some business and financial news you can finally use. Before we kick things off today and get into our first main story, Wall Street strategists are concerned that a slowing economy could knock the S&P 500 down from its record year, although they might just be paranoid. As of recording this, the index has not seen a 10% or more drop in well over 370 trading days. In fact, the S&P 500 has risen over 20% over the last year. Everyone is always trying to figure out when the next big crash is going to happen, but we always say to hope for the best but prepare for the worst. Markets are always going to experience up and downs, so it might be better to just ride the wave and stick to your plan. And in today's financial tip of the day, it's the little mistakes that'll get you. This is exactly why budgeting is the foundation of any long-term wealth building plan. But anytime you start something new, it can be super easy to make mistakes along the way. One common mistake people make when it comes to a budget is forgetting about semi-regular expenses that you'll need money for but don't always add into your budget plan. Birthdays and holidays are often things people forget when making a budget, and if you want to learn 3 other things that you definitely should avoid when making a budget, I'll leave a link in the description to our article on just that. But before we get into our first main story of the day, I need you to do me a quick favor and smash that thumbs up button and ring that bell. That way YouTube can show our videos to other prospective money minds, and we can share even more business and financial news. First up, let's go over a quick recap of what happened in the markets yesterday. The markets overall traded in the red yesterday as the sell-off continues during this shortened week. On the flip side, though, weekly jobless claims hit a new pandemic low. In addition, first-time filings for unemployment insurance were well below their estimates at only around 310,000. And in other news, MasterCard made a huge statement in regards to its love for crypto. Yesterday, the company bought blockchain analytics startup CipherTrace for an undisclosed amount of money, but we can bet it was for some serious moolah. In today's first main story of the day, we have a policy change, which is signaling to the rest of the world it might be time to taper off. You heard that right, monetary policies are finally beginning to taper off, at least for other parts of the world. This week, Australia's version of the Federal Reserve began ripping some band-aids off. The Federal Reserve Bank of Australia will officially begin to scale back its bond buying program. And it looks like the European Central Bank followed Australia's lead. The bank said that it would make asset purchases at a much slower rate than it did over the previous last 2 quarters. And that may sound like some huge news, but you may need to check the fine print in order to get the full story. Australia and the European Central Bank are only slightly reducing the amount that they are purchasing each month. In other words, they're still boosting the economy just at a slower pace than they used to. This is mainly because the pandemic is still present in most parts of the world, which is exactly why world governments are still a little bit concerned about ripping the band-aid fully off right now. Over here in the States, though, we've got the next big Fed meeting coming out on September 21st and September 22nd. So keep an eye out for those dates and watch out for any big policy moves. Our second main story today is in travel, so you better prepare yourself for a big landing. Here's what happened. Right now, it looks like major US airliners are lowering their forecast for the remaining of the year as travel demand is far weaker than anticipated. American Airlines is expecting a 28% drop in sales for the 3rd quarter when compared to the same time in 2019. The company is also expecting profits to nosedive into the negatives again. In addition, United Airlines is also expecting a 33% drop in revenue as well as a 28% drop in capacity due to weakening demand. Southwest Airlines is expecting a 15 to 20% drop in revenue for the month of September when compared to the same month in 2019 as cancellations continue to rise and bookings continue to fall. Now, it's important to mention here that travel demand typically dips this time of year as kids return to school and vacation season finally ends in the US. But pandemic fears are beginning to tighten their grip on business travel as well. But as more offices continue to push back the return of their employees, business travel demand that typically surges in the fall may remain flat this year. So if you have any travel coming up, Money Minds, make sure to stay safe out there and utilize that free legroom while you've got it. And that is it for our main 2 stories of the day today, so let's take a quick break from the news to talk about today's sponsor, Fundrise. Money Minds, investing in real estate is easy when you use Fundrise, mainly because you can now invest in real estate without unclogging toilets. That's because Fundrise is the first simple, low-cost real estate investing platform on the market. And when you invest in real estate with Fundrise, you'll get paid with dividends every single quarter. In addition, all the money that you invest in Fundrise will be invested into multiple real estate properties across the country instead of just one. Which is awesome because all you have to do is fund your account and then pick your investing goals. And the best part is you can get started with as little as $500. If you are interested in taking Fundrise for a test drive and want to learn more about their historical returns, I'll leave a link in the description below for you to check them out. And if for whatever reason you are not happy with your investment with Fundrise, that's okay. They have a 90-day money-back guarantee that they'll actually buy your investment back off of you. So there's little risk to you and a lot of potential for reward. Like I said, if you want to learn more about Fundrise and all of the things that they offer to real estate investors, I'll leave a link in the description below for you to check out. Now, let's get back to the news. It had a long run, but it looks like it's finally time to ditch your Fire Stick. That's right, move over Fire Sticks, because Amazon is finally releasing its first ever TV sets this October. Right now, it looks like there will be 2 different versions of the TV being sold. The first one is the fancier, high-end Amazon Fire TV Omni series. This TV will allow users to control it without a remote. In addition, it has a webcam for video conferencing and can even connect to other Amazon Echo speakers for surround sound quality. Oh, and it even offers a top-notch picture quality so that you can rewatch The Office in style. The other, more affordable Amazon Fire TV 4 series has plenty of cool functions as well, but this one is smaller and is not compatible with voice control and doesn't have a webcam like the Omni series. Amazon has become famous for its Fire Stick technology, which allows users to just plug it into the TV and stream directly from there. But if you've ever had a Fire Stick, then you know it was never that easy. So these TVs were created by Amazon to be frustration-free and setup-free as well. Literally, once it's plugged into the wall, it's ready to go. Users simply need to plug the TV in, and as long as any device in the home is connected to Amazon, the TV will automatically connect to Wi-Fi and the Amazon account. At the moment, Amazon plans to roll out an update later this year for the TV, which will allow it to control different home settings such as lights, cameras, and thermostats. Next up in today's Mind Break, we have the slow and the steady invest in crypto. Online broker Robinhood recently released a new feature that allows investors to auto-invest in crypto on a daily, weekly, or monthly basis. Now, automatic investing is nothing new, but it's definitely a hot topic right now. But Robinhood's approach is pretty new when it applies to crypto. Auto-investing can be a little daunting for the wide range of investors on their platform. Beginner investors may see it as a way to put that hashtag time into the market rather than trying to time the market. But there's been some speculation over whether or not it'll actually do you any good. Crypto has a reputation of being very volatile and very speculative, so setting up automatic investments may not be a very good idea, especially for the beginner investor. The bottom line is Robinhood is pushing this new feature as a way to automatically build your portfolio over time. But honestly, there needs to be a more researched and deliberate strategy when it comes to crypto investing. Before you send your life savings straight to the moon with an investment in crypto, check out our article on how to stay safe in crypto on theminoritymindset.com. Moving on, it's time to pick your brain. Which just so happens to bring us to our second sponsor of the day, Noom. With Noom, you can finally stop dieting and lose weight for good. It's time to skip the trendy diets because Noom helps you build healthy habits so that you can live a healthier life. This is because Noom combines technology with human empathy to create sustainable weight loss. If you're interested in losing weight with Noom and want to start your 14-day free trial, I'll leave a link in the description below where you can find them. Another story to pick your brain today is that Ford is spending nearly $2 billion to close 2 large manufacturing plants in India. The move will reportedly put thousands of people out of jobs and will cost the company nearly $600 million just this year. Next up, we have Money Minds, where we pull comments from our YouTube, Instagram, and TikTok accounts directly from you. That's right, we read the comments. This comment comes from Lillian Emily on our YouTube channel, and the comment reads, "The best thing to be on every wise individual's mind or list is to invest in different streams of income that are not dependent on the government to generate the funds." Thank you so much, Lillian Emily, for the comment, because it beautifully illustrates the idea of passive income and making money in your sleep. And honestly, having multiple different income streams isn't as difficult as it sounds. Whether it is grinding a side hustle or owning a rental property, the more streams of income that you have coming in, the bigger your money pool will get. You can learn exactly how to build multiple income streams the easy way on our main YouTube channel, and I'll leave a link to a video on exactly how to do it in the description below. And we're about to blow your mind here because we're going to introduce you to the Amazon Scholarship. Amazon just announced that it is covering 100% of its 750,000 hourly employees' college tuition. Starting this coming January, all employees' textbooks, tuition, and other fees will be covered by Amazon after 90 full days of employment. The company will even cover high school diploma programs and GED programs. The e-commerce giant previously only offered to pay around 95% of tuition and fees through a career choice program, but they amped it up a bit as rivals like Walmart and Target began offering full rides for their employees. In 2020 alone, Amazon hired over 500,000 employees, and in May, it announced it's looking for around 750,000 more to work in warehouses and as delivery drivers. Right now for Amazon, the starting hourly wage is around $17 an hour for warehouse and delivery jobs for both the US and Canada. Amazon has even started offering around $3,000 in sign-up bonuses in some areas to raise incentives for employees to apply. So if you do decide to apply to Amazon, make sure not to spend it all back on Amazon. Money Minds, we are reaching the end of today's Market Briefs newsletter, so here's a few more things to keep in mind. Twitter is currently testing out new ways for its users to react to tweets beyond just liking. Users in Turkey can now respond to some tweets with emojis, including the thinking face, clapping hands, and laughing emoji. And it looks like President Biden is instituting a new rule mandating vaccines for all federal workers. This means that the option to opt out of vaccination and get tested every week instead has been completely removed. Another thing to keep in mind this week, Money Minds, is that Burger King is copying McDonald's by offering celebrity meals. So far, McDonald's has featured both Travis Scott and Sweetie in a combo meal, and now Burger King is upping the ante and having a Little Huddy combo meal. And finally, a group of 101 NFTs from Bored Ape Yacht Club just sold for around $24 million. Another bundle later sold for around $1.8 million, which is a little bananas. But that is it for today's business and financial news, Money Minds. Keep hustling, and I'll see you all in the next one.